So the key things that people do wrong when they're getting a remortgage. Thing number one, I touched on it. They get emotional. They figure I'm going to stick it to that lender because I don't like how one of the people dealt with me. Don't get emotional. It's math. There is no one sitting at that bank saying, I'm going to get this person or I'm going to get that person. I've worked in banks for 30 years. And it's sometimes interesting when you reach out to a client whose information has just popped up on your screen because you have to contact them about something. And because you do have an overview of their situation and their profile, people think that you've been studying them for the whole day and you're talking specifically to them. Yes, you are talking to them, but you are talking to a customer who you're trying to help. So don't get emotional when it comes to mortgages or anything finance related. Do your very best to just be data driven. Another big mistake that people make, I've noticed this, they wait until the last minute. Life is busy. I get it. We have families, we have jobs, we have hobbies, lots of things going on. But a mortgage is such a big thing and it can cost you a lot of money if you do it wrong. So don't wait until the last minute. Always have a view and an understanding of when your mortgage fixed term is coming to an end. And as it's approaching, start talking to a mortgage broker. Speak to a mortgage broker. I would say the moment that that letter from your current lender lands, speak to a mortgage broker. Tell them, well, this current lender is offering me X, and we can do the math and figure out if other deals out there are going to actually save you money. But when you're speaking to your mortgage broker, big deal, make sure you're open and honest. I've been doing this for a really long time, so I can usually figure things out. I ask questions that I have a clear view of what's going on. Hiding things from your mortgage broker does not help you. It will hurt you because at some point, the thing that you're hiding will come out. And banks don't mind that people are human beings and maybe they've had blips in their finances, etc. What banks don't like is something called non-disclosure. So that's a thing that was not mentioned on the original application that they found out. One of the reasons why banks want to see 3 months bank statements and 3 months pay slips is just to make sure that they have a good overview of what your finances look like. So it's best to be open and honest. Don't hide anything because as a mortgage broker, we work with lots of different lenders, which means if we know everything up front, we're able to find the lender who will lend to you based on that thing. So make sure that you're open and honest. Make sure that you have a relationship with your broker that you can explain things in details. My name's Anthony Lindsay, and I've been in finance for over 30 years. I don't say that to big myself up. I say that because I've done a lot of different things. So I've worked in wealth management, I've worked in collections, and that's key because I've had to deal with situations where the broker maybe hasn't done the best job and things have gone wrong. So make sure that you reach out to me. Here's the QR code. I'm a real person. I'm not an internet influencer. So when you call, you're not speaking to a VA or a PA or a bot. You'll actually speak to me. Your appointment will be with me. And my appointments don't cost anything. I do these videos to help people improve their financial literacy. Hopefully, after watching this video, you'll do your own due diligence and maybe you'll need a broker and you'll come to me. But even if you don't, make sure that you have a standard that you hold your broker to. One of the things that you have to make sure that you hold your broker to is being open and honest with you, being responsive, keeping you up to date. The whole idea or concept of no news is good news is not good for you as a client. So make sure that your broker is being open, honest, keeping you up to date, answering your questions, is available. And sometimes they'll need to tell you no. Sometimes I tell clients no, not because I don't want to do the deal for them, but because based on what I can see, it may not put them in a better situation. And that's really important when it comes to remortgages because switching banks is good for me as a broker because if you are going to work with me, I'm going to charge my fees. But sometimes staying with the lender that you're currently with is going to be what's best for you. So let's look at your credit. If you're remortgaging, the position of your credit or your credit profile is important. Has it changed since you did your original mortgage? A top tip, you know what I'm going to say now. Check your credit report at least once a year. I would say every 6 months. Every time I'm doing a mortgage for someone, one of the things that I ask for is their credit report from Check My File. 8, I'd say at least 70% of the time, they find something on their credit report that they weren't aware of. Quite often it's a utility bill, or maybe they got a parking ticket and they weren't notified, and therefore they may have picked up a CCJ. Make sure you check your credit report regularly, because this is one of the biggest factors in what products you'll qualify for when you're getting a remortgage. Not your credit score, but your credit profile. Do you have any missed payments, late payments, CCJs, defaults, or maybe payment arrangements? All of these things can potentially disqualify you for the best products. So make sure you are checking your credit report regularly, staying on top of it. Clear small balances, even with a remortgage, especially if you're going to another lender. We want to get you as much affordability as possible. So if you have any small balances, clear them, get them out of the way, and be honest about what's there. So the feeling, or at least the view, is whatever is documented is what is true. So if it says something on your credit report, that is what the lenders are going to go with. So be honest about what's there. And I'm not saying that people are intentionally lying or being dishonest, but quite often their emotion or their feelings about the thing are what they think the lender should go with. So you have a missed payment on a utility bill and you feel that it shouldn't have gone on your credit report. It wasn't an error, but maybe you were away and you forgot to make the payment, and therefore you feel that the lender or the provider shouldn't have put that on your credit report. If it's there, that's what the lender is going to look at. So make sure you stay on top of your credit report. So be open, be honest. Your income, we're going to look at your income now. Know your employment status and know if you're considering changing your employment status. So what do I mean by that? In today's market, a lot of people are looking for ways to generate more money. And if you have certain skills, it may be more profitable if you go self-employed, or if you go on contracts. They can be a lot more lucrative. But if you're planning on becoming a contractor, always speak to a mortgage broker. Although you can get a mortgage as a contractor, there are certain guidelines and certain things that lenders look for. How long have you been working your current contract? Have you already renewed a contract? What is the end date of your contract? So understand your employment status. Understand, are you PAYE? Are you self-employed? Are you 0 hours contract? Maybe this has changed since you did your original mortgage. So understand your income, understand your employment status. Are you thinking about switching to contracting? Think about it, but make sure you speak to a broker, because yes, it might be more money, but you might end up having difficulty getting a mortgage. And how close are you to retirement? This will impact how long you do your fixed term for. If you're approaching retirement, maybe you want to do a shorter fixed term, that the way that it's calculated when you do your remortgage is still based on your income while you're working. I do have videos on this, but in short, if you're within a certain amount of years of the state pension, then lenders will need to look at what you'll make when you retire, even if you don't plan on retiring at that age. So if you have the type of job that you can continue to work, you might say, well, I'm not going to retire at the state pension age. But a lot of lenders are going to look at the state pension age and say, well, is this person paying into a pension? Are they able to continue working? So make sure you consider how close you are to retirement in your income, because that is very important. And that's one of the things that lenders are going to look at when they're assessing your remortgage.